Hi, everyone. Happy Wednesday, and welcome to our Multifamily Freedom Chasers Financing Zoom call. For those of you who do not know me, my name is Shelly Miles. I am an author, a commercial mortgage broker, and the co-founder of our brokerage company called Adventure Commercial Capital. So what our company does is connect real estate investors like yourself to lenders, and we are here for you. With that, I'm going to go to the first slide. So today's agenda is going to be, we're going to talk about our ecosystem. And then we're going to do some introductions. We're going to introduce who we are, and then we'll give you the opportunity to introduce yourself. We're going to give you the current debt market update. We're going to get into the main topic, which is what is 2025 going to bring to the debt market? And then we're going to have a Q&A at the end. We haven't done a Zoom call in a month, so I'm happy to be here tonight. Hope you guys are too. All right, go to the next slide. So let's talk about our ecosystem here for a minute. We have 4 calls that we do on alternating Mondays and Wednesdays. The first Monday we'll have the activation Zoom call with Trevor. You can get activated for the week with a celebrity guest that they bring on. Is always inspiring, so don't miss those. Then the next Monday, the alternating Monday from that, you'll have asset management with BB and Iffy. If you close a deal, what do you do next, right? The real work begins. You will learn the fundamentals, explore real life scenarios, challenges, and solutions for your multifamily operations with BB and Iffy. And they're always active in the multifamily space. Then you have us, Jerry and I, with the multifamily financing. You'll get live updates on the current debt market. You'll learn how to take and to find and qualify for debt to take down big multifamily deals. Then you have deal sourcing and underwriting with Ed and Kevin. You learn how to engage with brokers, source deals, and underwrite them quickly and efficiently with Ed and Kevin. And that is our Zoom calls we have every Mondays and every Wednesdays. I am going to share the link. So I'm going to share the link to the Facebook group where you can get all these updates and notifications on when these events are happening, so you don't miss it. If you're new, and I know there's not very many people on today, go ahead and put one in the chat so we can say hi to you. If I can find my chat. There it is. So everybody has been here before. Well, glad to have everybody back. I see you, Eric. You're always on here. Glad to have you. All right. What's your next slide? So there's the link. I put the link to the Facebook community group in the chat. You can also connect with the Multifamily Freedom Chasers on YouTube, Spotify, Facebook. You can catch us on Instagram and WhatsApp, which is the next slide. You can scan this QR code and you can join our WhatsApp group if you haven't already. And then it's you, Jer. Take it over.
Hello, everyone. Happy Wednesday and Merry Christmas, Happy New Year, and all that stuff if I forget to say it later. So I am Jerry Miles, Shelly's husband. All right. I was muted for a second. Can everybody hear me now? Okay.
Yes.
All right, cool. Thank you. So we are the Miles. That picture there is of me and my wife and our 2 sons, JJ and Jordan. We are commercial mortgage brokers and co-founders of Adventure Commercial Capital. We lend on commercial real estate and investment real estate nationwide. We started this company about 5 years ago now because we saw a need for brokers that were there to serve the real estate investor community. We'd been investors ourselves at that time for about 5 years, and had the runaround from several different brokers that just didn't treat us fairly, and we didn't like the way we were being treated, and so we decided that we could do this business better than the other people did, and so here we are 5 years later, and going strong. So that is us. And I'm going to give you all, anybody that would like to, and I'll start out by saying there's been people that have met each other on these calls, and have done business together. We have people on the call here um, that are able to KP deals, able to sponsor deals, have done deals. We have a guy at our church that did a contracting job. He remodeled a 6-unit apartment building for somebody that he met on our call here. So make sure to put your information in the chat, and let everybody know who you are and what you do, and minimum. But I'm inviting a couple of you right now. Probably got time for 2 people to raise your hand and say, hey, I'm so-and-so, I live here, this is what I do, and I'm looking to do this in the future. So anybody that wants to go ahead and raise your digital hand, and we'll get you rolling. Jacob, Jacob, I see you. How's it going, bud?
Oh, it's going well, Jerry. Yourself?
Doing great.
Okay, perfect. I'll introduce myself, everyone. My name is Jacob Havlovic. I'm in the Phoenix metropolitan area. I currently am a senior financial analyst for a flooring distributor. I'm doing real estate investment part-time, trying to make that a full-time occupation, so trying to make that transition. And so love to connect, meet with everyone, and just network with all of you. Just this is one phrase I'd like to share is, in real estate, your network is your net worth, and that is one I've come to appreciate. So, Jerry, thank you for sharing this.
Yeah, for sure. I'm glad you're here. Phoenix is a great market. There's a lot of people shopping for deals in that whole Phoenix, Scottsdale area right now. So
Very true.
yeah. All right. Anybody else? Well, our son JJ is usually on here helping us. He's been on here in the past. I guess 3-4 months ago, he started he's a YouTuber, and he started a job working for one of the largest YouTubers in the country, editing videos for him. And now since then, his own channel has taken off, and he's hired 2 people now to work on his own personal channel. And he's got 2 sponsors that he's got advertising on his channel now. And so he usually shares his successes on YouTube. So he's been so busy that he doesn't really sleep or join our calls or anything anymore. So he's going after it. So I'll brag on him a minute while I'm waiting on somebody else. If anybody else wants to step up. If not, we'll move on.
And he's only 18.
Yeah, he's just graduated high school this past year. So he boycotted everything senior year at his school. He didn't play basketball. He didn't do nothing that he had been doing because he wanted to focus on YouTube, and it's paid off. So, all right. So we'll get started here on the current debt market. Where are the current rates? Over the past couple months, we've had about 75 basis points in rate cut from the Fed. If you guys are following on that, they've cut the rates twice, once 50 basis points, once 25 basis points. We're expecting some more cuts in the first quarter of next year. But in all actuality, rates have gone up since, the actual mortgage rates that we pay have gone up since the Fed has cut their base rate. And that's because mortgage rates are based on the treasuries. The treasuries have been going up slightly. You see the 10-year treasury 4.2, the 5 years 4.12. So when you're looking at the treasuries, if you want to see what the treasuries are, you go to CNBC, or just type it in Google, what's a 10-year treasury, and you'll have a bunch of sites that pop up that you can view what it is currently. But you look at that 10-year treasury 4.2, that means if you're getting a 10-year term on debt, it's usually amortized 20, 25, or 30 years, but a 10-year fixed rate term, your rate is going to be based on that 4.2. So it'll be 4.2 plus whatever the spread is. Sometimes it can be as low as 1.3, 1.4 over the treasury, depending on the property and the management, things like that, or the sponsors and those types of things. Could be anywhere from 1.3 to all, I've seen them where they're 4 points over the 10-year. So just depends on the deal and what kind of project we're looking at. So yeah, the treasury rates determine the rates we pay. So this is for long-term mortgages for through Freddie and Fannie. A lot of your bank mortgages that you'll get through your local banks will be based on the treasuries, depending on how the bank is set up. And then even your residential mortgages will be based on the treasuries. Andrea, good to see you. All right. So these here that you see are your Freddie Mac small balance loan rates. Updated on the 10th of December, which was yesterday, I believe. Yeah, yesterday. You see this, the terms, the DSCR, your loan to values, and then you see the rates. When you see the high end, could be different reasons why it would be on the higher end. Could be maybe sponsorship doesn't have the experience. Maybe it's because the property isn't in an ideal location. There's a lot of different reasons that could be. And so, but like I said, Freddie Mac small balance loans, this is loans anywhere from really 1 million to 6 million. The next sheet I'm going to show is Fannie Mae small balance. This is 1 million to 7.5 million. When you get over that 7.5 million on the Fannie Mae side, your rates are going to drop, anywhere from 15 to 45 basis points probably, depending on the deal. So when you get the larger deals, rates get better, terms get better. So all right. And the next sheet I'm going to show, I don't always show this one, but I'm showing it because these rates are getting more and more competitive with Freddie and Fannie, and this is CMBS rates. In CMBS, you can borrow on more things than just multifamily, and you see the 10-year fixed loan rate term up top. Those rates are getting really competitive with Freddie and Fannie. You see the 75% loan to value, 1.25 DSCR. And these are based on the SOFR, this standard overnight financing rates. And this is the just a way that the banks trade money back and forth. They use the SOFR rate. But you see on multifamily, we're breaking at 6% on some deals on the 10-year. So these are getting really competitive. Things to note about CMBS is that they don't their underwriting is not as stringent when we're looking at sponsorship as Freddie and Fannie. And also we can in certain cases, when we get larger deals, usually 10 million and above on loan amount, we can underwrite CMBS loans to the interest only payments, which can allow you to get more proceeds. So you can get with Freddie and Fannie, you can get options for interest only, but they're not going to underwrite your DSCR to the interest only payments. They're going to underwrite your DSCR to your principal and interest payment. With CMBS, if you get a full 10-year interest only loan term, they will allow you to underwrite your DSCR to that interest only payment, which will allow you to get, your payment's going to be lower, so you can get more proceeds there. So those are reserved for deals usually over 10 million in loan amount. So that's a pretty cool thing about this. So we have a very large hotel right now that we're trying to get an LOI signed on through CMBS. It's going to end up being somewhere between 50 and 60 million on a refi on a hotel in Manhattan. So we're waiting right now. They've been waiting on rates to come down, and the CMBS rates have come down about 0.5 point here on the hotels since we turned the term sheet to them. So we're hoping here before the new year we have a signed term sheet and we're ready to close one here the first quarter of the year. So, but CMBS is getting really competitive, especially on that 10-year up there that you see at the top. So we've had a stagnant market over the past really 3 years, starting to break free. People are starting to come to grips, I believe, with the idea that rates aren't going to come down the way they want them to. I think it's going to kind of, right now it looks like people are starting to realize, if rates don't go back down to 4%, I'm still going to have to do something with my loan that I've got now that it's outstanding, and they're starting to work things out and figure out ways to make things work. So there's been a lot of people lose a lot of equity in deals here since the rates have kicked up, and a lot of these deals have been sitting and they just keep extending the rates, extending terms. The banks are only going to do this so long, and people are going to either have to be forced to sell or put some money into a refi. Most of the refis that we see now, people have to bring cash to the table to refinance them. So it's just the way the market's going right now. You see all the numbers here for the debt that's maturing. I say these numbers will be higher because of in 24, this 450 billion, a lot of that debt is still there. It's just been put on a year extension. So what the lenders will do is they'll say, hey, yeah, we'll wait this out another year with you. Pay us 2 points. You can pay us one now, and then you can pay us another one at the exit of this loan. And so people are having to pay up to be able to stay where they're at. So, but that's going to change eventually, unless rates come down real quick and save people. So that kind of gets us into
I think you're frozen.
Yeah, we lost you, Jerry.
Yeah.
Jerry is frozen in time.
Let's see if we can get him back here. Let me call him.
No, poor Jerry.
Jerry and Shelly are awesome, by the way, guys.
Yeah,
Seriously,
they are.
just contact them offline after this to ask them just basic questions about anything regarding multifamily. They're pretty seasoned.
Yes, yes, they are. They are priceless.
Well, thank you guys. So there's a first time for everything, and he got kicked off of his own Zoom call. So he's signing
Aw.
back. He will be on in just a minute. If anybody wants to share a little bit about themselves and your real estate journey, feel free to. Okay.
Um, oh, I'm actually snacking and I unmuted myself. Whoops.
I'll introduce myself. I'm Andrea Garcia. I've been in multifamily real estate for about 7 years now. So I specialize in underwriting and transaction coordination, anything from taking a deal from start to finish. And I think I have around 1,800 units as a GP owner. But I've helped probably north of 2 billion in volume of acquisitions, dispositions, refinances, stabilization, and exit. So if you guys have any questions, also feel free to reach out. But Jerry and Shelly are pretty great at answering questions as well.
Yeah. And Andre's a good resource. I said at the beginning that there's people on here that can help you buy deals and you know, there's always somebody in the group here that is that's done it before, and Andrea is one of them. So I'm glad you're here, Andrea, and thanks for introducing yourself and keeping things going while I was gone. So I don't know what happened with my computer, but
We were joking around saying you were lost in translation.
yeah, yeah.
We went to the Twilight Zone and back. No, just
Yeah.
uh,
All
hi
right, so
everyone.
can everybody hear me now and see the screen?
Yes,
Okay, great. All right. So
looking clear.
awesome. So yeah, the housing affordability, housing shortage, all those things have been a main topic in the news cycles. You know, and really to make housing more affordable, we either need more supply, you know, we need, you know, rates to come down would help, or, you know, housing prices have to come down, you know, to make it more affordable. When the rates kicked up, you know, for 3% to 6.5% and 7%, you know, a mortgage for a $500,000 house doubled. You know, when you're looking at the extra money it takes to pay that mortgage. So most people that would buy a house, you know, they're going to buy as much house as they can for the money that they have to fit their debt to income ratio, and so then that took a bunch of them out of the market, which has been good for rentals. You know, you have a lot of people renting apartments now that, you know, are really qualified to have a mortgage, but because of the affordability crisis, you know, you're now, you know, for a while here, there's been higher quality tenants and things like that for these apartments. So there's good things as an apartment owner for that. But so, like I said
Slow and
before, we've
steady.
had I'm sorry.
Slow and steady.
Oh yeah,
Wins the race, right?
that's right.
Um, all good things take time.
That's right. Yep. Yep. So,
Would you?
we've,
Oh, sorry, Jerry.
oh, you're good. So we've had a few rate decreases. The Fed's saying that they're going to drop another 75 in the year 25. But the Treasury's really, as they lowered rates at the beginning, everybody expected Treasuries to follow, and they just really haven't. Right now the Treasuries are kind of in the same range they were in 2007. And we all know what happened in 2008 with the banking crisis and all that. And the reason why is just the uncertainty in the market. There's been a lot of uncertainty because of inflation, because um, we've got all these threats of different wars. We've got just, you name it, and there's the news cycle has been carrying it here. Um, but what will make the treasuries come back down to where we need them to be for the apartment business to be able for people to be able to get out of their loans and to continue buying and trading and all that kind of stuff is either something really bad has to happen that just wipes the economy out to where they say, oh, we need to lower these things and get them down, uh, because we need people to be able to pay their bills. We need, things are just so bad that we need to just drop the floor out from under everybody to bring it back, or we need to get some stability back in the market. People need to be more confident that, hey, maybe we are paying 7% now. I know we paid 3 a few years ago, but 7% is where we're at, and we just got to make it work. And so those one of those things have to happen, to bring the treasuries down, I think. So
Yeah, usually a crisis is the I want to say the benefactor to change, right?
yep, yep. Yeah, crisis always brings a lot of change to different things. So um, so over the last 2 years, or even before, even a little longer than 2 years, we've had really below average trading volume. So uh, it's not good for our business. It's not good for people that are buying and selling apartments. If there's people not trading, then you're not trading, you're not making money in a lot of cases. A lot of the time, these apartments, you're not making a lot of money on the month to month, through the cash flow. Um, the money comes when you're able to sell something for a profit, have your investor splits and move on to the next one. And same for the realtors, the brokers, the lending people. Um, everybody needs the trading volume to pick up to be able to stay in business in a lot of cases. I expect this year um, that the trading volume is going to pick back up some. Because I think there's going to be some certainty that'll come back. Maybe not the rates. I don't know that that's really going to happen. I mean, we might over the next year, drop a percentage point. But I do see some stabilization coming back, I think, which should mean more transactions. Um, we have a new administration coming in, which is something else that is, I think, gonna, love him or hate him, the new administration coming in is a real estate person. They've been in the real estate business their whole life, family of real estate people. So they're going to be fighting hard to make real estate better. If you watched financial news, when Trump was president before, he was, press conference after press conference, railing against Jerome Powell, the guy from the Fed, fighting against raising, them raising rates and just all these things. Now I've told this on here before that I was watching an interview with Jerome Powell on Bloomberg. One of the people on Bloomberg was interviewing Jerome Powell. And the question, we were at that point a year and a half to 2 years into rates being hiked up, faster than they had been hiked up in 50 or 60 years, whatever it was. And they asked Jerome Powell, hey, what kind of feedback is the Biden administration giving you when it comes to the rate hikes that we've had and the things we've seen happening with financing? And Jerome Powell said, we've not had any conversations about it, which, tells me that it wasn't on top of their list, to take care of real estate investors and to make things better in that market, or they would have been on the phone with him and talking about it. But like I said, Trump's a real estate guy. I think that's going to do. I think we're going to see some good things in the realm of real estate that's going to make things better. So if nothing else, maybe confidence. We might see lower rates because of it and some stability. One thing that people are cautioning about with that is, as rates would come down, if we have rates go down a couple points, that it's going to cause a buying frenzy in real estate, that people are going to come out of the woodwork trying to buy homes. Apartment buyers are going to be trying to buy. It's going to cause a frenzy, which could cause more inflation. So, if you're already a real estate owner, inflation's kind of a good thing for you, because your value of your properties go up, you're doing good. But it hurts a lot of people, when prices are going up like that. So, and I've even heard different experts talk about, that, bringing rates down too fast, getting the market hyped up again and, kind of on its run again could cause hyperinflation, to where, things just bump up so fast that that nobody can stop it. So that's something to watch out for as well. So, and I could foresee that happening. You know, especially, like I said, Trump's a real estate guy. He owns real estate. He's going to be fighting to make real estate more valuable and all those things. And, somebody like that could let it get out of hand and we could see that hyperinflation and things, but who knows? I certainly don't have the inside information on that, but just different things. I like watching all the different financial news and hearing the experts talk about it and tell what they think. So we'll see. It'll be an interesting time to keep an eye on to see what happens. So this is my last slide for the main topic is, so will 2025 be a good year to invest in real estate? And I'll do no first, and I'll say, why would it not be a good time to invest in real estate? Well, I mean, we're really at the beginning fringe of all this debt maturing with higher rates and all these things coming up. You know, if you buy something now, next year, whatever you buy could have a lower value. You know, I mean, you could lose equity next year if we have a lot of foreclosures. We have, you know, some of these syndicators that can't keep up. They're forced into foreclosures or forced into selling, and you know, and then things just continue. Cap rates go up, bringing the property values down. You know, we could see a couple years of something like that happening. You know, but why yes? Um, I'm just a little over 40 years old now. We've been buying real estate, you know, and selling real estate here for 10 years. 10 years ago, some of the deals that we passed up on that I see now that I thought was too expensive 10 years ago, I see them and I say, dang it, we should have bought that deal. You know, because over a 2 or 3 year period, those values might drop. But over a 10-year period, real estate always goes up. You know, so if you buy something now and it cash flows and you've got 5 or 10 years debt on it, let's say next year it appraises for less than what you bought it for, but it's still cash flowing. You've got debt locked in 5 years, 10 years, you're probably going to make some money on that real estate. It's just like the idea, the old thing. I think it was George Washington that's credited with this quote. I'm not sure, of when's the best time to plant a tree? Well, the best time to plant the tree 25 years ago. But if you didn't plant it 25 years ago, you might want to plant it
Right.
today. And so if you haven't started investing in real estate, I would say start investing in real estate, cautiously invest in real estate, making sure that you've got deals that you're comfortable with, ownership and the asset management team that you're comfortable with, the KP that you want to work with or do business with. And I just, you know, yeah, it's about the deal. But if you get in the business with the wrong people and you join the wrong group and you invest with the wrong people, it's, you know, the best deal could be bad. So I've heard people say, oh, well, it's easier to get a divorce than it is to get out of an apartment deal that's gone bad. So cautiously go into an apartment deal, or, you know, even single family, whatever it is, you know, just, you know, I would say don't back away from buying. We haven't jumped into any apartments ourselves yet. We did close on another single family last week ourselves. So we're still buying in this market. Um, you know, we got a good buy on it. You know, it's just the way, you know, buy, and if it cash flows, it cash flows. And like I said, over 10 years time, you'll be glad that you bought it. You know, I drive past different deals, different properties that, you know, 10, 5, 10, you know, 15 years ago that I'm like, man, I remember looking at that property. I could have bought that property for 65 grand and now it's worth 250, 300,000, you know, and I'm like, man, what's wrong with me back then, you know? But um, but yeah, go buy deals and get on deals, invest your money, and sit and wait. You know, instead of wait to buy and wait. So, and we can go ahead and go to a Q&A now. I'm going to open it up for Q&A. I'm going to continue going through slides. We got about 15 minutes left. I'll keep going through slides if anybody has a question. go ahead and raise your hand, and I'll answer them as I see you with your hand raised. So if you are needing help with debt on a property, you want a quote, you want us to help you out with a refi or a purchase, these are the things we need if we're looking at multifamily. Multifamily, self-storage, retail, office, any of those. We'll need a T12, we'll need a rent roll. OM, if you have it, it's helpful because a lot of times the T12s and rent rolls don't have addresses of the properties and things like that on them. And a summary of what you plan to do with the property. SREO and PFS, a schedule of real estate owned, and a personal financial statement. We will need those before we go under an LOI or anything. But not to get a quote per se. I'll look at something for you, and then if it's something you want to keep going with, you can work on getting a KP or whatever. So needed for a quote on a DSCR loan. This is 1 to 4 units. Address. If it's a purchase, I need the purchase price. If it's a refi, purchase price, date purchased, and current value. Monthly rent, taxes, and insurance cost, and the borrower's credit score. And we've been doing more of these here lately. Rates are in the mid sixes. So you can actually get an investment real estate loan, these DSCR loans, for around the same rate range that you can get a regular 30-year, homeowner's mortgage with right now. So this week's verse, Colossians 3:23 and 24, whatever you do, work at it with your whole heart as you're working for the Lord, not for human masters, since you know that you will receive an inheritance from the Lord as a reward. And Thanksgiving was just a couple weeks ago, or I guess a week ago now, wasn't it? Was it a week? No, 2 weeks ago. And do everything with Thanksgiving. If you have a job that you struggle to go to and you're trying to get out of that job, you're trying to get out of this, trying to get out of that, you don't like it, you're not having a good time. If you treat it like you're thankful for it, those things will always be better for you. The job, marriage, whatever it is, treat it with Thanksgiving and appreciation, and it will be better than if you treat it with disdain and disgust and all those things. So our next Zoom is January 8th. Our next day that our Zoom is supposed to happen is on Christmas Day. So we're going to skip that one, and will be January 8th. And our topic is going to be different ways you can invest in real estate in 2025. We'll go through all the different ways that you can get involved. This is our contact info. That's my cell phone, mine and Shelly's email address. And if you scan the QR code, that will give you my hi hello card. And I'll pull this up, but I think our schedule and things is going to be a little different going into the new year. I'm not sure what it's going to look like. So don't memorize this page, but just know we're going to have calls. We just don't know what the schedule and all those things is going to look like. So, and I appreciate everyone being on here. If anyone has any questions, feel free to ask. I'm on Shelly's computer here. Oh, there's the chat. Let me see if there's any questions in the chat. All right, cool. I see everybody connecting in the chat. Any ideas on funding for an ALF in a residential home? What do you mean by an ALF? If you want to unmute and tell me, Ayana.
They say elf.
Yeah, AL. Oh, assisted living facility. Okay. Okay. And so the question was, any ideas on funding for assisted living communities? Yeah, there's a few different ways to fund those. Depending on the loan amount on those. SBA can be a good option. If it's going to be property that you have, active role in managing, SBA, in some cases you can get 90% loan to value. An SBA will allow you to do 90% loan to value. They'll allow a seller 5%, and then you can put 5% down on a deal like that. With SBA, you do not have to have the net worth requirement. So if you have a net worth of, let's say 500,000, you could qualify for a $2 or $3 million loan through SBA. So there's a lot of good things when you're looking that route. So a local bank in that area, wherever the project is, can sometimes be a good resource as well for those. So we do fund through SBA. So if you have one that you would like us to look at, reach out. So
Jerry, I had a quick question for you.
yeah.
I know you provided me with like a quick debt quote for this 140 unit property that was about 65% occupancy on the rent roll, but now I have a updated rent roll from the broker that it's about up to 87%. So do you think the lenders will want to look at the last 3 months average occupancy or just the last month occupancy on the rent roll?
Is this a lot of that depends on why was it at 65%? Did they just rehab and
Yeah.
what's the story behind it?
Yeah, they rehabbed it and they're they switched up the tenant base completely. So they
Okay, so it's a lease up.
relocated. Yeah, it's a lease up.
Yeah. So if we get, I'm trying to remember, was this loan amount going to be over like the 2 million mark?
Yeah, so it's probably going to be north. Our offer is going to come in around 4.5 million, and so loan would be close to 3.5 probably.
Okay, gotcha. Yeah, Freddie and Fannie a lot of times will allow for a T1. And then during purchase, I mean, they're going to, if you get it up above the 90% mark on occupancy, we can base it on the T1 on a lease up like that. But they're going to keep an eye on that up to closing, because by the time we get to closing, we're looking at 60 days-ish to close. So they're going to have a rent roll for the next 2 months by the time they get there. And they're going to want to see an average of 90% or better by the time you get to closing.
Right, I thought so. All right, cool.
Yeah.
Appreciate it.
Yeah, no problem. Glad you're here. Glad everybody was here. And everybody have a Merry Christmas. And I see someone said, do you do home equity loan for rental property? We have options for that on higher valuation properties. So if we're looking at a deal, let's say a property that's worth 800,000, maybe there's 250,000 in equity that we could pull out. Let's say you owe 300,000, we can pull 250 or something like that out. We could do that. if we're looking at something like sub 150,000 in equity to pull out, we don't really have an option for that. So in home equity line, I need to specify that it would be through a rental property. We don't do any projects, anything owner occupied. So if it's an owner occupied, I can connect you with somebody that can help you with that. But, you know, if it's rental property, we can help with that. So I hope that helps. All right, everybody. Have a Merry Christmas. And we will see you next time unless you reach out and need some help with something. We would love to help.
Merry Christmas.
Thanks again, Jerry. Merry Christmas.
Thank you so much.